Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, makes it 4 o'clock in New York on Monday, March 28th, 2016, and this is the Daily Report for Gold and Silver. We do have gold trading higher today, nominally higher, up about $3, but to me, the big picture and the real story today is the low that we made, which is roughly at 1208. Has that been the low, the conclusion of our C wave that we have been waiting for, or are we in store for lower prices? High today, 1223, so just about $3 off the high, but it's that low that we absolutely want to take a look at first. So traders, I want to take a look at two distinctly different charts. They're both going to have Elliott wave. One is our very, very short-term view, and then our long-term view. First to our short-term view. Of course, we're looking at half-day standard candlestick charts. And on this particular chart, we are attempting to determine where this current correction, which really began at 1287, could in fact come in and conclude. And when we look at today's activity, as I said on the opening credit, so to speak, that what really has gotten my attention has been this low that we got when the market hit approximately 1208 today. And the reason that low to me could be so very important is that it could be in fact letting us know that we could have concluded our C wave here, and that would give us a subcount of 2. And so the way we would look at it, of course, is we had this defined bottom. This came back at the end of last year, 2016, this being December, beginning of this year. We had our wave 1. We had exactly a 62% retracement that came in for wave 2. We had a 261% extension. This is a 38% retracement, which is where we get this 1196. Of course, we had our compression triangle, which really completed wave 4, and then wave 5 is what took us to the top. Now, from there, that of course completed this one. We went into some sort of a basic correction, and my belief is that we had an A, our B, and then I believe we could have in fact seen a final C here. And there's a couple of reasons why this number comes in. First of all, as I said, our basic sweet zone, as I have been calling it, has been anywhere between 1205 and 1195, and it's based on 2 fib retracements. Of course, the long fib retracement is a 38% retracement of this entire move, meaning 1040 up to 1287. However, if we take another fib retracement, which begins at 1071, in other words, the beginning of our wave 3, our 38% retracement comes to 1205. And it is for that reason that I believe that this number is so absolutely significant. And I do correct my low. The low today has been 1206. So we're right at those numbers. So the fact of the matter is that we are now in an area where we want to look for some potential bottom action. And then when we look at we'll have to look at the daily, of course, but when we look at the half day, we can see that it attempted to make some sort of a 3-river morning star variation. However, when we convert the half day into a daily chart, which is what I've just done, you can see we're nowhere near any kind of a real 3-river morning star. We wouldn't get that without really having this green candle be a long green candle, and it would have had to open above the prior close or the doji star that is gapped in the center, that being this star right here. Now, the next chart I do want to take a look at is going to be a little bit longer view of the market. And traders, I've done just that. I've brought up a daily chart, and of course this daily chart has got our major count, our major fifth, our major A, which is that entire corrective period. And as you can see, what we're looking at is whether or not we saw a wave 1 and then a wave 2 culminating roughly in this area at about 1205. As you can see, I've got that number here also. And it does seem quite likely that that could be the case. Now, here's what's exciting. If in fact, again, this being a subcount behind the intermediate, but if in fact that is our conclusion, and we do go into a wave that is our third wave. That third wave is going to take us, without a question of a doubt, above $1,300 per ounce. So it's simply a matter of timing, and when we believe that we have seen a eloquent bottom in the market and have some technical confirmation that we are moving off that bottom to higher ground. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review.